All right, now we're going to go into, I saw so many of these when I was going through the market analysis, and now's a really good time to do it, right? With the bearish posture in the market. So there's many chart patterns out there, and one of them that I like a lot is my second favorite one. My favorite one is the cup and handle that we talked about on PBR. So this is to me is probably the highest probability pattern when you see, and you can see indeed, here's your lip line, here's your cup. I talked about this a couple of weeks ago. So if you go back to the sniper recordings, you'll see it. And I have a trade on this actually, a bullish broken wing butterfly. And I would be so surprised if this stock closed below this lip line, and it hasn't yet. Yeah, it's an oil company in Brazil. It broke above on high volume and then started rising and then fell back away right to the lip line. That is mega strong support. Mega strong support. I think we put a credit spread on last week, but I didn't see a fill on it. If any of you have that, then, just let that 15 do its work, because it is right now. But head and shoulders patterns are another one. Very high probability pattern. And I don't know what probability they are. I'd say 60, 70% probable, depending on what's going on in the stock and the news and the markets. All of that can upset any pattern. But the head and shoulders pattern, as I've already illustrated, and I found this cartoon figure because it really shows the shoulders, right? So here's a shoulder, then you have a head, and then you have another shoulder. Now that you're not going to see symmetrical head and shoulders patterns very often, but here's one. And this happens to be on the Russell 2000, the Russell 2000 ETF, the IWM. And I'm proposing that we place a trade on this based on the bearish news in the market and this pattern. So here's our neckline. And I dropped it a bit. The neckline can sometimes be, ideally, the stocks bounce off this support line over here with this shoulder. And then you have a head there. And then you have a shoulder there. Now, in this case, ideally, this stock would come down to this neckline. It didn't. That's okay, though. And then we hit the neckline here. And then once we get a high volume break below the neckline, which is what we got last week, boom, high volume. Now this becomes mega strong resistance, mega strong resistance. And so with this pattern, you derive a bearish target by taking the distance from the neckline to the very high here. That's right there. And then you drop it all the way to the neckline again, and it's off the charts, but the target would be the distance, backing it up again, the target would be the distance from the top of the head to the neckline, drop it all the way down, and use that number to forecast your projected move. And obviously it's way lower than it is now. Now, how do you find them? Well, one, tune your eyes to start looking for them. There are pattern generators out there, and here's a free one that allows you to find them. And what you do is this is finviz.com. They have a paid membership, but this is all free. You go to screeners, signals, and then you'll notice on the very bottom that there's head and shoulders and inverse head and shoulders. So what's an inverse head and shoulder? It's this one upside down. So this is a bearish pattern. The inverse head and shoulders pattern is a bullish trading pattern. So let's hop into FinViz and take a look around. Okay, when you go into the stock screener, it's really good, really good. And that it's free is surprising to me. When you come in here though, under descriptive, make sure you select optionable. All right, we're not trading stocks here in snipers, we're trading options. So make sure you specify optionable here. And then after that, you can come up here under signals and look for head and shoulders patterns. And there's a lot of them. There's 2 pages of them. All right, now so from here, you can take a look at each of these stocks Or you could say, you could do a little bit more analysis. So maybe on the technical side, click technical and look for situations where the stock is down. Forgive the ads. So in this case, with down, none of them show up. So that's ideal because then your timing is the stock's dropped. Maybe it's dropped below the neckline and it gives you a bit of a head start in your analysis. Don't see any there. And then from here as well, you can add other types of criteria to find to zoom in. I'm looking for, where is it? I'm looking for index. There it is, right there. Maybe we go to the Russell 2000. So I've narrowed my scope, my search, to only head and shoulders patterns in the Russell 2000. And then we can take a look at these two in a live. You can look at the chart here, but it's hard to see the chart. So I'll go right into Thinkorswim. EPC. What's EPC looking like? Can we see the head and shoulders pattern? Yeah, there's a few of them in here, right? I'm just trying to find the one that it sees. So if we look at this as the neckline here, somewhere here, let's say. Let me draw my line here right at 38. You kind of got to go like this with your face a little bit to find them, you know, but certainly shoulder. This has got multiple shoulders and multiple heads. Here's the head. Here's a shoulder. Here's a shoulder. So right in here is a head and shoulders pattern that's been breached. How about here? Shoulder, head. It's not clean at all, but you can see a really strong support line here. I would say in this case, if we drop below 37 or 36, then possibly a bearish trade. Very volatile stock. So I don't love that one. MWA is another. Yeah. See, again, it's not clean, right? Shoulder, head, shoulder, not the cleanest of signals at all. So let's look at some of the other indices. Remember the Dow is in a head and shoulders pattern. None there. S&P 500. There's HCA. We looked at that already. FTNT. We looked at that one already. AutoZone, AZO. Yeah, shoulder, head, shoulder. We need to come down here below this point here before we take this one on. So you have to look, you have to take a look at them and do a little bit more of analysis. And there's a shoulder, head, shoulder. The neckline here is right around 290. So until we breach 290, shoulder, head. The right shoulder hasn't concluded yet. We are below the 200-day average though. And a close below 290 on above average volume would be an excellent head and shoulders pattern. So put that on your list, close below 290 on ANSS, ansys.com. Then you got a good candidate for a bearish trigger. All right, now let's go to IWM because this is a trade I want to do. Look at where we are right now. So again, the expected move is the distance from here to there all the way down, and that's off the charts. We do have strong support down here around 171 or so, 170. We've gapped down today on the open. Is there going to be a recovery above 180? Doubt it anytime soon. It could happen. It could happen. But that is now super strong resistance right at 180. So that's some data we can use. So let's go looking for trades. Now I'm going to look at Friday's data. And I'm going to go right into Tom's tools under searchers and look for call credit spreads. All right, now this has a built-in trigger. It actually, if you click this item here, which says default parameters short term, when you do that, it turns on a requirement that the stock is down before you'll see the result. And this is going to be Friday's data, right? So then you come in here and you put in your symbol, IWM, and hit search. And based on Friday's data, these are the trades that it's come up with. So here's a 28-day trade offering a return on investment of 58.73% with a probability of making it at 67.29%, statistically generated based on how much the stock moves over the prior 28-day period. And based on that, you have a 67% chance of making 58% on your money, and you're selling exactly at 180. And that's as low as I want to go on this. You know, one of the adages in credit spreads is sell at support or resistance. Sell a call spread at resistance. A short call spread is a bearish trade. And that's what we would do here. So we could sell a call spread dead on 180. Or we could give ourselves a bit more safety by maybe selling up here at 182. So no lower than 180 on this. That's the plan. And so if I notice here that this is selling at 180, but maybe I don't want to be in for 28 days. So let's take a look at that one.